Like iPhone, for example, doesn't itself manufacture any of its iPhones. It is given to somebody, you won't even know which company. But iPhone is popular. So similarly, Nvidia as a stock, we've all sort of heard about the wealth it's created for people, and that's where that top layer lies. Anybody can enter the space because we don't have a space really. So might as well be CG Power.
Just go give it a try, and if you are successful,
No, not that. We'll come to why it will work later. But yeah.
Hello and welcome to Taking Stock, the weekly podcast wherein we pick one company, one stock, and deep dive into it. And today's company is CG Power. So I think we recently read that CG Power is entering into the semiconductor industry. Could you please start by saying why is CG Power entering semiconductor industry and why is it so important for us?
So, firstly, CG Power is not a semiconductor. It's not related to semiconductor in any way, right? So far, CG Power since the last 90 years has primarily been a supplier for railway as well as the power industries and industrial sector as well. So it's providing equipment and several other electronic equipment, basically transformers, switchgear,
motors, or something.
yeah, circuit breakers, network protection, generators. A lot of those equipment that are heavily used in not only the power industry but also railway as well as industrial use.
Okay.
So that's been the background of CG Power. And very interesting that they're entering this space of semiconductor. And while it is interesting that someone with a different background is entering semiconductors, I think it's important to understand that the semiconductor space in India is entirely white. It has nobody. It has nobody who's got historical experience of semiconductors. And hence, anybody entering the space will be an equal surprise. So, for example, Tatas are also setting up a plant for semiconductors. There are several other, at least 10 new projects that have been approved by the government for incentives when it comes to semiconductors that are being set up in India. And none of them obviously have anything to do with the entire industry because the current import numbers themselves are very large. India is a largely import dependent sector when it comes to semiconductors. So a lot of numbers suggest that at least 95% of our semiconductor needs are imported. That number stands at a 1.7 lakh crore as of FY 23-24. If you look at 25 numbers, it's not yet out. But industry estimates are roughly at about 2.1 lakh crore as the import bill for semiconductors in FY 25. And none of this is being made in India. Right, it's all imported from China, Taiwan, South Korea primarily, and that's what we're getting here. So yeah, to answer that, I think anybody can enter the space because we don't have a space really. So might as well be CG Power.
Just go give it a try, and if you are successful,
no, not that. We'll come to why it will work later. But yeah.
Understood. So before going into CG Power's decision and all, it would be better if you could sort of lay out the background on the semiconductor industry, its value chain, so that and where do investors or even the listeners can know how to make money while spotting some gaps in the value chain or spotting trends which are happening across the value chain.
Right. So I think a good start point is the fact that India is now ramping up heavily on its electronic manufacturing. So we're producing a lot of end devices. We've been in the news for famously being a replacement to China for iPhones, for example. iPhones, China was the largest manufacturer, but India is taking away a lot of that share by manufacturing iPhones. We've got star companies in the past like Dixon Technologies, upcoming ones like PG Electroplast and EPAC, and a lot of these companies that we keep talking about that we've invested in at several times in several of our products. Which do a lot of electronic manufacturing, not just for domestic consumption because we have a large captive market, but also for exporting out of India. However, a lot of the chips that go inside these electronics, we don't make. And that is the large deficit. Right now, just to understand the value chain, and we'll put it very briefly in terms of how the process follows, is that someone has to design these chips.
Right.
That is where the IP lies. That's where your stocks like Nvidia, AMD, Qualcomm, Broadcom, all these guys are experts in designing of complex chips. Simply put, these guys are advancing at such a level that more computing power has to be fit into smaller spaces as time passes.
So basically, these are the brains behind your semiconductor
Yeah.
chip, sort of.
So
Yes.
the ideation and the brains,
Got it.
that comes from the design element of it, which is done by these companies. And these are the ones that are now popular because they own the intellectual property. Right? Like iPhone, for example, doesn't itself manufacture any of its iPhones. It is given to somebody you won't even know which company. But iPhone is popular. So similarly, Nvidia as a stock, we've all sort of heard about the wealth it's created for people, and that's where that top layer lies. Next comes a process which is known as fabrication. So fabrication is where popular companies are TSMC, Samsung, Intel, Global Foundries. All these guys are known for fabrication. Fabrication simply means that transforming raw silicon wafers into functional chips. So that is the base layer of any chip, the silicon wafer. So these guys actually manufacture the silicon layers, and this is a very complicated process. This actually involves a lot of layering. This involves a lot of multi-pronged approach, lot of time consumption, lot of capex consumption, and this is somewhere where global expertise makes a very large difference. And the power centers of chip manufacturing, as we know, is either is mainly Taiwan.
Taiwan.
So that is completely dominated by that one area. The next part is after these chips are manufactured, they have to be assembled. They have to be assembled, tested, and packaged. So this is where something known as OSAT comes in, which is outsourced. What is it? Outsourced
Semiconductor
assembly and test.
Yeah.
So that's where this part comes in, where the manufacturer of these chips won't do this bit. They will give it to somebody else to sort of do that. And then when the chips are assembled and electronics or parts are made, these parts are further given off to electronic manufacturing companies, which basically assemble the cover, the electronic parts, the various components.
So basically, they give it a shape as to how do you have to
Yeah.
mold it or put it in a particular your end device.
The end device is later made by your
Yeah.
Dixons and all of these, but they will take the chip from somewhere else.
Okay,
They'll
got it.
take the cover from somewhere else. They'll take the screen from somewhere else. So all that is assembled by then companies who are in the manufacturing services part. And then it finally goes to the end consumer. So in India, we've got if you now go reverse, India's got a great end consumer market. We've got a electronic manufacturing space which has evolved massively over the last decade or a little more than a decade, and is still evolving and growing at a fast rate because of exports now, but a very thriving space there. And the problem starts above that. So assembly, we have negligible presence. Before that, fabrication is currently, if you ask me or anybody, it is out of our reach. It is something we shouldn't even think of attempting at this point in time. And before that is design, where obviously intellectual property, we may have a shot there because a lot of these companies, which are Nvidia, Broadcom, etc., they have their global development centers in India. A lot of Indian engineers are actually helping them. They're employed there. So Indians have the brains to and the capability and ability to design these chips. They're already making contributions there to MNCs. However, the gap then remains fabrication and assembly.
Assembly.
Now, if I have to compare these two, fabrication will typically take a capex of say anywhere between $100 million to $1 billion to set up. Assembly. Fabrication, on the other hand, will take anywhere between say 10 to 20 billion. So the capex requirement for fabrication is 10x to 20x larger, and the expertise required is much more, and we don't have experience there.
And I think it is much more complex also, right?
Course.
Than the
Yeah.
assembly and testing.
So fabrication is the most complex piece of the entire bit. So I think the way India is going is that we're ramping up very hard on that assembly, testing, packaging, or OSAT part at this point in time, and that's where CG Power is one of the first ones to establish presence. Along with it, there are some other companies as well, including the Tatas. So there are listed 10 projects which are listed in this space at this point in time who've got approvals and government support, and this will obviously increase over time. So we've taken baby steps. And CG Power is one of those who've set up this one area at this point.
Understood. So, but why this particular area itself, and why is CG Power going so, I think the investment is also massive, right? With I think around 7,600 crores they're planning to invest
Yeah.
Why are they taking such a big bet, and why are they confident enough, to invest so much in this particular space?
So I think confidence of entering a new space, especially with a large investment, comes not from CG Power, but from the Murugappa Group. So
Okay.
CG Power is a company that is owned by the Murugappa Group. It was taken over not very long ago. And Murugappa Group is historically known for acquiring companies in various new divisions and expanding. And they have shown a very strong track record of acquiring companies not in a space that they have expertise in, and actually leading that space after that. A good example is financial services. After that, even CG Power, for example, if you look at the history of CG Power, it was actually till about 2020, it was not owned by the Murugappa Group. CG Power was actually owned by a family called the Thapar Group. And they fell into trouble in 2019 for fraudulent transactions, bloating the balance sheet, several accounting related issues that actually tanked the stock from 200 rupees to 6 rupees. So it was one of those free falling knives, which, contrary to beliefs of not catching falling knives, Murugappa actually caught it,
Got it.
and made a success out of it. So back in 2020, Murugappa Group actually, through a company called Tube Invest, which is listed, they took a 51% controlling stake at 9 rupees per share. And then they revamped the entire company. They cleared out all the debt. They sold off non-core assets. They sold off land. They sold off buildings. They renewed the product offerings that these companies have. They introduced new clients to CG Power, revamped the entire management, and now the stock is made about 130%, not 130%,
131x.
130x return since 2020.
It's actually crazy amount of returns, to be making over the period of 5 years.
So
Yeah.
all those influencers talking about अगर तुम 20,000 का SIP, please go down the drain. This is something that shames every single influencer advice that you receive. So, in short, to answer that, I think this DNA or the ability or the line of thinking where we'll acquire something or enter a new space with a bold bet and with a proven capability of entering and dominating new spaces is not inherent to CG Power, but it is inherent to Tube Invest and inherent to Murugappa Group.
And it is trickling down to
It's trickling down.
CG Power.
Yes.
So now, but they might have thought or there might be a few reasons, right, to start investing in this semiconductor space. I mean, they might also know you that, because of so and so reasons, I think we are the right fit for
Yeah.
this particular space. So what are those reasons, or what makes you think that, CG Power could be the right player to, be investing in this particular space?
Yeah. Yeah. So, I mean, we already established that the industry is very, the potential is very large. India is taking baby steps, and there is huge potential within the country, and there is demand which is growing at more than 20-30% every single year. So that's a great space to be in. But you're right. Why CG Power? Right. So one is it's in the DNA, as you mentioned and established, that Murugappa Group has it. Right. The second is that government incentives are also aligning in this entire area. So the government has recently, there's something known as an India Semiconductor Mission, wherein the government is supporting the semiconductor industry by doing a couple of things, right? Very simple. They're providing fiscal support on capital expenditure to the extent of 50% for fab facilities, which is the fabrication piece that we spoke about, and for your assembly and testing piece.
Basically, OSAT, where
Yeah.
CG Power is also present.
Yeah. So after design, fabrication, and OSAT, both of these spaces, there is 50% government support in terms of capex, which is provided, which is a great piece, right? So when we are saying that about 7,000 crores is being invested by CG Power in its new OSAT facility, about 3,500 crores of that money will be subsidized by the government over a period of time. So this is not a grant that comes immediately. It's a grant that is given to the company. However, it is linked to certain project-based milestones, which may be associated with volume or with other milestones that may be set up. So as and when that scale comes, currently it stands as a debt in the form of CG Power's books. However, the government will keep subsidizing it as the project proceeds further. So the commitment is about 3,500 crores from the government at this point in time. But this will obviously take shape over the next 3 to 5 years as the plant and manufacturing capability actually roll out. So that's the second one. And the third bit is that after the turnaround of CG Power, I think CG Power is very well equipped in terms of balance sheet ability to make this investment. So while we're talking about this initial capex, the initial bit will be about 2,000 crore. Overlay 7,000 are supported by government. Initial is 2,000. So while this happens, we already have a 2,500 plus crore cash reserve within CG Power. CG Power is a company which is itself growing by 20-30% annually. It's got a revenue of about 10,000 crore.
Their main business is also actually in a good industry currently, which is
Which has enough government tailwinds and sector tailwinds, right? They are present in power, they're present in railway, they're present in industrial. So that itself is growing at 20-30% every single year. They are somebody who make about 15% operating profit margins, strong cash flows. So the entire psychology and ideology of the Murugappa Group, or especially Tube Invest, which owns controlling stake in CG Power, is that it's a 3-tiered structure. The first tier is you milk your existing cash cows. Whatever is giving you cash, you keep taking that cash. That is your stable business. Second layer is T2, which is where you make investments in sunrise industries in a very VC style. You make a seed investment or a small investment and you see that grow over time. So Tube Investment, for example, has done that with electric vehicles. They've done it with optical lenses. They've done it with CDMO. Similarly, these guys are partly falling in this T2, where there's a sunrise industry through semiconductors. T3 is where they acquire new companies. So while Tube invested in CG Power, Shanti Gears, all of these companies, CG Power now, in turn, is making this company, and it's not an acquisition. However, it is a joint venture with 2 other companies, and that is why the chances of success increase. So going back to your question on why CG Power and how do we know CG Power will even succeed in this area, is because it has actually collaborated with 2 companies here. One is called Renesas, which is a Japanese semiconductor leader. And the second company is called, I can't read my own handwriting.
I think it's Micro Electrosystems.
Yeah, it's called Sturs Microelectronics, which is a Thailand-based OSAT provider. So 93% of the company, 92 to 93, will be owned by CG Power, whereas 7% will be 6.76 is owned by Renesas and 0.9 by the Thai player. So it's actually bringing together different ventures who have the capability already, bringing their expertise on board, and then setting up this facility along with 50% support from the government. And mind you, all of this, when we are talking about the Murugappa Group, which is a large industrial conglomerate with presence in agriculture, finance, electronics, equipment, industrial products.
Basically, everything we know or we use of.
Everything you can think of, auto components, bicycles, right? Everything, fertilizers, pesticides, everything. So what we're saying is that one, there is group expertise, there is management capability. And the other thing is there is in-house demand as well. So tomorrow, if Tube is making, say, for example, electric vehicles, they've launched 3-wheelers and tractors and they require chips for it, they can actually be assembled within your own company, right? So you can actually start supporting your in-house demand. So from that angle, I think it's a great investment when it comes to CG Power and its future.
Interesting. So I think you have really broken it down to as to why CG Power is doing this and why it could be a good bet for them as well, because they are already trying to de-risk themselves from the usual or the big negative points which already all other new entrants face. So now, but the most important question here comes is that it's good that CG Power is making all these investments and all, but for us to now look at investing in CG Power, or even valuing it, how do I look at it? Because semiconductor, as you already mentioned that it is a sunrise industry, and there's no primer or already a set foundation base as to you should use these things to value a company's sunrise industry, or for that matter CG Power when it is entering into semiconductors. So how do I look at that space now?
So I think at this point in time, we are so nascent in this entire ecosystem and this stage of wherever this semiconductor piece is that CG Power itself is dividing its semiconductor facility into two parts. One is an initial part which will come on board, which has already sort of been, it's in the way of coming on board, where it'll do some micro testing, it'll take some pilot projects, it'll see whether it's working fine, do some basic work, which is short term, which is FY27, right? In this period, it will make revenue of about 100 to 500 crore, roughly. Let's assume a lot of broker estimates peg it at that. We'll say that they are right for this discussion, right? Then there's the medium term from FY28 to FY30. This is a period when they'll actually have the second facility, which is the larger bit, come into play, which will also be supported by the government, and the larger entire facility sort of comes into position. Imagine that they roughly are operating at about 50 to 70% capacity utilization. They should make a revenue of about 2,000 to 3,000 crore rupees during that period. Beyond FY30, this plant will have the ability to make anywhere between 15,000 to 20,000 crore of revenue at a 90% utilization level. To put this into perspective, current CG Power revenue is 10,000 crore.
10,000 crore.
It is growing at 20 to 30%. It has grown in the last few years, but because of the turnaround and everything, its peers are growing at roughly 15%, anywhere between 10 and 15%. Assume that you had to normalize this growth rate and CG Power were to grow at 15% CAGR for the next 5 years. Till FY30, they will reach a projected revenue of about 20,000 crore. If this happens, we're not giving projections, we're just saying that
Assumptions.
basic math.
Basic.
If it grows at 15% CAGR, 10,000 crore will become 20,000 crore by FY30. At that point in time is when by FY30, if the semiconductor piece gives you 15 to 20,000 crore revenue, it will become 40 to 50% of revenue. That is when it becomes material, right? Before that, it's going to be between FY28 and FY30, it's going to be barely, say, about 10 to 20% of revenue, right? So I think the way to value CG Power is break it down into two parts.
Okay.
Number one is your traditional business or your power and industrial solutions business. Now, who are the competitors here? You've got Siemens, ABB, Schneider, BHEL, Thermax, Hitachi Energy, all of these guys. Now you look at valuations in conjunction or in that dimension, right? So you look at, okay, how much are these guys growing? These guys are achieving 20% growth, highest in industry, 36% ROC, highest in industry, 15 to 16% EBITDA margin, highest in industry, premium valuations, justified. Yeah, that is the way of looking at it. How much premium, etc., you decide for later, whatever. That is one part, right? Second part is, now you come to the semiconductor piece, which is more relevant to your question. Now, in this, there is, as we explained in the beginning, there is a simple pyramid. Top of the chain, design. Second, fabrication. Number 3, assembly. These guys are at number 3. Now, if I have to look at valuations here, let's look at global peers, because India, this industry is nascent and new and emerging, or we don't have examples, but globally there are a lot of examples. Now, if I have to take a basic price to sales multiple, if I look at it, the design companies get anywhere between 10 to 40 times sales.
So just one interrupting you, why sales? Why price to sales?
Because they may not be profitable. Profitability may take some time to come.
Understood.
Profitability also varies across these companies, because design companies will have higher profitability because they're not manufacturing, they're only designing, so IP is sitting with them. So various reasons. So to sort of make it a level playing field, pegging it by sales at this point. Okay. So design companies 10 to 40 times. Fabrication anywhere between 5 to 10 times. Assembly and testing 1 to 3 times. So if I have to then look at where CG Power would stand, it would stand at the bottom. Having said that, we'd also like to add a caveat that the valuation, when I say 10 to 40, 5 to 10, 1 to 3, there's a large divergence. Now, anyone with a large scale or the market leader gets the highest valuation, the rest sort of comes down. So Nvidia is trading at a 40 times, TSMC is trading at a 10 times, the rest obviously get lower. So in India also we'll develop a similar hierarchy or a situation where the leader will get a 3 times revenue or more. I'm just putting it to global estimates at this point in time. However, the latter companies will start pegging themselves lower. So if I have to now value, again, coming back to CG Power, if I have to look at, say, for example, we are currently in FY26. If I have to look at FY28, what I would simply do is I would look at the core business. I would maybe make projections basis the revenue. FY28, we estimated 2 to 3,000 crore revenue. So on 2 to 3,000 crore revenue, if we give it a 3 times multiple, for example, at this point in time, you would get a valuation of anywhere between 6 to 10,000 crore for that piece. The residual piece needs to be valued at a price to earnings, like you're doing for the rest of the companies. This company is obviously trading at a much higher premium. It may continue to command that premium because of its superior financials and positioning. So that would be the simple way of putting it together and seeing if there is potential in CG Power or not.
I think we have pretty much covered everything.
So I think in a nutshell, sunrise industry, beautiful space to be in. And the important takeaway from this entire exercise or this discussion is that these guys are making an investment of about 2,000 crore at this point in time. However, that investment has the potential of giving you 15 to 20,000 crore of annual revenue FY30 onwards, to an extent where this particular revenue stream could even make up for 40 to 50% of total revenues of CG Power.
So basically, you are getting one more CG Power in the next 5 years.
Not necessary. You may get a CG Power plus because it's a sunrise industry and they're doing better work. So from that angle, is it a great investment? Yes. Do the current valuations support it or not? Is every investor's discretion, which we can't.
This is for you guys to decide. Yes.
But yeah, that's in short, great investment with a lot of potential. And given the current scheme of things and given the company's strategy of balancing out existing areas and emerging areas, it seems to be in a beautiful direction.
Okay, so now coming to the community question section, where I think our viewers across social media platforms ask questions and we select one question. So this time's question is from Mr. Raj Pandya. So his question is, I have been investing only in a Nifty index fund so far, but with extra income from my side gig. I want to explore riskier investments. How can I safely increase my risk appetite?
So typically, since he's been investing in Nifty 50, we're assuming that he's comfortable with passively just tracking the index. And a riskier investment would involve probably individually selecting stocks. So that is a great way of taking the next step. And maybe selecting a few stocks, because mutual funds would invest in say 50, 70 or 100 different stocks. And hence the returns would get diversified along these many companies. But if you go for an investment in individual stocks or build yourself a portfolio of say 10 to 15 different stocks, you could reduce the amount of diversification and hence increase your risk a little bit, thereby increasing the probability of you getting higher returns. So the ideal way of going about it would be, if you have the expertise, if you have the time to research, if you have the resources available, and if you have the interest to do it, obviously, you research by yourself, select individual companies that are great, or listen to our podcast, get insights, and build yourself a portfolio. Second, if you don't have the ability to do that, then just depend on an advisor. Either the advisor can help you with a basket of stocks like we do, for example, through small cases, or they can help you build and manage the portfolio like we do through Voyager. So depending on the involvement of the investor, they can either go direct, take advice, or take a managed approach. But that would be the ideal paths for Mr. Pandya.
Understood. Okay, guys. So I think we have pretty much discussed what we wanted to about CG Power, and it's a wrap. So stay tuned, and we'll be back next Tuesday with another stock and more insightful discussion. So yeah, bye.
Disclaimer: this content is for informational purposes only. None of the stocks, brands, or products mentioned are recommendations or endorsements.